Hi, my name is Alec Young. I've been a currency broker for about 2.5 years now, and today in this video I'm going to be giving you the ultimate guide for moving euros into pounds. If you're perhaps an individual that has sold a property over in the EU, or maybe you're a business that has transactions over there, you may well find yourself in the position of needing to repatriate your funds back to the UK. In this video we're going to explore the 3 main ways you can do that, as well as give you some helpful tips about how to time the market as efficiently as possible, as well as a breakdown of the mechanics of how that transfer process works. So stick around and we'll go through the details. It might be helpful if we just cover some of the basic terminology when it comes to currency transfers. If you're familiar with all this, feel free just to skip along to the part that's going to be most helpful for you down below. But for now, let's just cover some of those basic definitions. What is an exchange rate? The first and most important definition. An exchange rate is essentially a benchmark between 2 international currencies. Now, what can affect that benchmark is a vast array of factors. It can be international trade, it can be government spending policy, it can be central bank policy. Anything that you can think of that takes place in the political environment or the economic environment is going to result in a fluctuation of the market. The actual exchange rate itself moves every 3 seconds during the Monday to Friday trading that you see, and the international forex market is the most liquid market in the sense that there is trillions of trading volume going through the markets every single day. Bid-ask spread. Something really important to understand, because currency exchange isn't free. You may well hear people say they're charging no commission, no fees. A lot of the time that is a bit misleading. So you need to understand what bid-ask spread is. And essentially, if you've got the market here, this is what we call the mid-market. That's something that's sort of bouncing around every 3 seconds. What you're going to have is going to have a spread either side of that. And that difference between the two is essentially your fee. How far you are away from market is how much you're being charged for that service. It generally comes in a percentage format. If you're looking at a competitive currency company, that should be below 0.75%. If you're looking at a bank, typically in my experience, they're anywhere from 2 even up to sort of 6%. So you need to be really careful when you're looking at navigating fees. And sort of third key term that's worth touching on is market volatility. Now, as the name suggests, it's just a metric really of how much a market moves up and down during a given trading period. Because if you're looking at moving tens of thousands, hundreds of thousands of a major currency, that slightest movement can result in financial differences of thousands. So you have to be really careful and mindful of that fact when you're conducting your currency transfer. So then, the 3 main ways you can transfer money. The first one is, of course, your bank. Relatively easy. You can just log on to your online platform, set up the details of your UK account, process it, and what the bank will do for you is they'll carry out the conversion behind the scenes from euros into pounds, and then the pounds will be, of course, sent over to your sterling account. The main downside, of course, is it's very expensive. Banks have built up a reputation, bar a few of the sort of new challenger banks, of being very expensive for currency exchange. You're talking their fees being anywhere from 2 to sometimes 5 to 6%, and what they do is they bake that fee into the rate of exchange. It's quite difficult, unless you know what you're doing, to actually work out the fee that you're being charged. The second common way to transfer funds is via an online platform or application. Pretty straightforward. So what you do is you'd register with one of these companies, log in, set up your account, and then you'll be provided with the details of their Euros safeguarded client holding account. And then what you'll do is, via your bank, either through their platform or going into branch, you'll set up a euro to euro transfer. That stops the bank having the obligation to convert those funds. Those funds will then be sent to your online provider. They'll land in euros, at which point you can then organise a conversion through them into pounds for that payment to then be instructed onto your UK sterling account. Really, really good. I'm not here to sort of bash online companies. One thing to bear in mind though is they're normally pretty good for small amounts, very quick and efficient. What you tend to find is when you go up that sort of volume scale, the service that you want isn't quite there. So you're not going to really have a one-on-one account manager that's going to help you through the process. And particularly with that size of currency transfer, the slightest change in the exchange rate through market volatility is going to really affect your outcomes. So that sort of leads nicely on to the third bracket, which is the currency broker. Now, currency brokers do operate in a similar fashion to online platforms. There is an alternative to the main sort of high street banks, offering a lower cost alternative. But what they tend to do is specialize in moving large amounts of currency. So you'll typically be given a dedicated one-to-one account manager who will be able to set up an account for you and then guide you through the process step by step of how to transfer your funds over to them, to then start looking at the conversion, at which point any good currency broker will be there to sort of watch the markets for you, be your sort of eyes and ears. They're not there to sort of offer any sort of outlandish predictions about where they think the market's going to go. So they're really there to be sort of a wise pair of hands to guide you through the process, and of course to be able to offer an opinion about what's going on in the world, what's driving currency markets, and that way you can sort of make your informed decision. What's quite nice as well with one of those sort of setups is if anything goes wrong, and unfortunately things can go wrong in the international banking system, it is quite antiquated. You can pick up the phone, speak to your representative, and they're going to be able to dial into the details. A few words of caution. Although currency brokers sound great, particularly with large amounts, there are a few things you need to be aware of. They're typically not as transparent on their fees as your online platforms are. If you were to use one of these companies, perhaps like Wise or Revolut, you'll normally be able to log on and very quickly see what their percentage is, what their total fee is, and that obviously makes most people feel pretty comfortable. They know what they're paying for, whereas most currency brokers, they will hide their fees like the banks do within that rate. Now, it should be better than the bank, but that's something you need to explore, because not always will it be. To be with somebody that's worked in this industry for about 2.5 years, there is sometimes a culture of currency brokers taking advantage of clients and keeping that fee hidden within the rate rather large, to the point that you're not really saving loads using them over a bank. So they kind of play on that need for customers to have that hands-on service, and just be careful you're not paying more than you should be doing. Okay, so in this part of the video we're going to talk about what can affect the euro to pound exchange rate. Now, there are so many factors and you could spend hours talking about them all, but just wanted to give you guys sort of a few key takeaways of what can affect the markets, particularly with this currency pair. And so the first one is economic indicators. So if you were to type into Google economic calendar, for example, you click on one of those, you'll see that there's a raft of data being released every day from around the world. You can have data that affects the Japanese economy, the Australian economy, but of course with this currency pair, you want to be watching closely data coming out from the UK and the Eurozone, the EU. What's more interesting is that within the Eurozone, of course, there are individual countries, so you'll find with this particular economic indicator set, you will get individual countries' data coming out, as well as what is normally sort of a basket data release that incorporates the whole of the EU. So keep an eye out for that, because particularly when it comes to data from France, Germany, Italy, Spain, the large major economies within that jurisdiction, they can have an outsized impact when it comes to how the market moves compared to any sort of smaller nations. You'll see how data is generally categorized as sort of high impact, medium impact, and low impact. That just gives you a bearing of how important that data is. So, for example, Eurozone inflation data is coming out. That is classed as a high impact event because it really does determine how the central bank policy is going to respond to trying to control that inflation. So it's really important you know where that data is coming from, understand when it's being released so that you know when you want to trade. If you want to avoid a volatile event, an important economic indicator being released, you can trade before that, or if you're someone that's a bit of a risk taker, you can sort of have your view on how that data is going to come out and sort of potentially trade around it. What can also affect the euro to pound rate is political events. Now, this could be something like Brexit, which of course took place a few years ago now, but still does have ripple effects through the currency pair, or it can be something like a new government being appointed, Boris Johnson leaving number 10, being replaced by Rishi Sunak, similar events that can take place across the channel in various European countries, whether in the individual nations or at sort of the European level. Different treaties being signed, political implications for those can all affect the currency pair. Another thing that can affect currencies, particularly the euro to pound, is market sentiment. And what market sentiment is really is sort of a gut feeling from traders and participants in the market. And it's generally a case of you have a few economic indicators, sort of data points that come out over a period of time that start to confirm a story within an economy perhaps. An example of which is the inflation data in the UK. At sort of time of recording this video, we started to really see a resurgence of inflation in the UK, and then of course the response from that is the perception that the Bank of England will increase their interest rates to try and fight that inflation. So that sort of sentiment feel is that interest rates are going to stay higher for longer in the UK, and that of course has affected the pound and made it much stronger in the last sort of few months. So the key takeaway here is for euro to pound transfers, there are a lot of factors that affect that exchange rate, but the main thing you can do is equip yourself with the knowledge of how that market is moved and the factors that impact that. It's going to stand you in better stead than somebody that perhaps doesn't. If you want to play the game, so to speak, walk in with sort of a set amount of money that you're prepared to, in theory, lose. So if you're selling a house and as it happens, you're due to sort of receive about £200,000 at the prevailing market rate, maybe you say to yourself, okay, I'm willing to let that figure go down to 198,000 for argument's sake, with sort of an upside target of maybe 205. But don't start going in there thinking you're going to make extravagant amounts of money. In my experience, helping hundreds and hundreds of people move life-changing amounts of money in my sort of career, it's generally the ones that think they're going to make a fortune that get their fingers burnt. It's the cool, calm heads that can look at the markets and say, okay, it's jumped up a little bit today, I'm going to take advantage of that, or it's come down a little bit, I'm going to remain calm and wait for my time. Those are the ones that generally do well. So just be careful, don't try and predict the unpredictable. Next thing we're going to look at is transfer fees. And to make you aware, as somebody that's been on the inside of this industry, it is kind of confusing by design. There are a lot of different terms that mean similar things. You've got commissions, you've got margins, spread, fixed transfer fees. So I want to be able to break that all down for you so that you know how much you're being charged, because it can make an enormous difference. If you're, for example, being charged a couple of percent on a life-changing amount of money, so you've sold a property or conducting an investment in sort of the tens of thousands, maybe even hundreds of thousands of range, you can quite clearly see that that charge is going to amount to several thousands of pounds or euros. So you've got to be tremendously careful. So let's break down what those charges are. First one is a fixed fee. It's generally a sort of per conversion or per payment fee, and normally relatively small. So it'll be anywhere from sort of £10 or €10, and that's essentially the bank sort of charging you sort of an administration fee for processing that trade or processing that payment. Don't fall into the trap of somebody telling you that there's not a fee. You'll often see that currency companies or banks say no fees because they're not charging you that small fixed fee. They are making money, it's elsewhere, it's in the exchange rate itself. So be mindful. It's not always a bad thing if somebody's charging you a small fixed fee. Sometimes they'll do that and then they'll offer you the market rate, so you're actually getting a cracking deal. But if you weren't to understand the sort of vocabulary around that, you may think because you're being charged a fee, you're getting a worse deal. So just take your time to work out how much you're being charged. So the second main way you're going to be charged for your currency transfer is within the exchange rate. And if a company is not upfront with what that percentage fee is, that margin, that spread, be tremendously cautious. For me personally, it's too much of a red flag. What they're trying to do, I'd imagine at least, I can't speak for everyone, but what I imagine they're trying to do is sort of hide that fee from you so that they can effectively make it as large as possible, because they want to take as much money from you. Unfortunately, some businesses are like that. So just be careful, take the time to work out the charges. So hopefully with a good understanding of what a fixed fee is and what a percentage margin or spread within that rate of exchange is, has given you the tools that you need to be able to calculate what you're being charged by a currency company. As I said before, just to summarise, the best thing you can do is use a company that's fully transparent about their fees, saves you the time of having to work out what that percentage figure or that fixed fee is. However, if you are wanting to use a company that just gives you a trading rate and not an actual sort of fee, just make sure you're careful. Visit my blog so that you can sort of check out how to use the calculation tool for working out what that fee is. And if you are comparing providers, make sure you're ringing around or contacting them within a 15-minute window. It's generally the best practice. Just because the market being ever moving, if you're getting a quote from one company and then the market's moving as you're doing so, by the time 15 minutes has elapsed, you're looking at a quote that's not valid anymore. So make sure you're doing a quick ring around, compare your options, get the fees up front if you can. If you're not, that's probably a red flag and you probably shouldn't use that company, in my opinion. One thing I didn't touch on when I was discussing fees and charges when it comes to currency providers is hidden costs. It's something that you have to be mindful of. They do happen from time to time, and the way that it generally can happen is, now I've got to be sort of cautious with how I describe other companies, because I don't want to sort of label anybody as sort of being exploitative or using tactics that are unfair. But just to give you an idea of sort of my personal experience being in the industry, is there is a practice of sort of offering prospective clients sort of what you could describe as a teaser rate. So maybe you inquire on somebody's website, they'll get back to you, they'll give you a quote with that fee baked into it, with that sort of margin in the exchange rate, and you'll think that's a fantastic rate of exchange, I'll sign up with that company. And in doing so, you then send your money over to them ready to be converted when it arrives, and then they call you up and say, money's here, I'm just going to run a quote for you, and then lo and behold, they will build up that included fee, that margin, that spread. So what I'd say is, to avoid that, best thing you can do is just agree a fixed spread from market with the provider. If they're not forthcoming with that, that is a big red flag, because that company doesn't want to tie themselves down to a fixed spread. They want to be able to get your money on the account so that they can try and increase that fee without you noticing, so they can make more money. So just be extremely careful. If you've got any questions about this in particular, just feel free to drop me an email. I'll happily assist you in any way I can. Some people have been stung pretty badly by this, so just be careful. What we haven't really touched on in greater detail is how we can actually time the market effectively. Now, it's just worth saying from the outset, I'm not a financial advisor, I'm not a market trader as such, I'm a currency dealer, I help people get to market. In my experience, there are a few things you can do that, let's say, increase your chances of a more favourable outcome. First thing you can do is, quite simply, monitor the exchange rates. The best practice, in my opinion, is when you know that you're going to be looking at a currency transfer, maybe you've just put your house on the market. It's really helpful just to kind of get a flavour of how the markets bounce up and down, watching things and seeing how markets behave to big announcements, maybe watching the market around a central bank announcement. It'd be interesting for you to see how the market behaves. Second way you can help yourself is use rate alerts. You can do this by just sort of going on Google and finding a currency tool and setting up a target price, if you like. Or if you're working with a currency broker or professional, you can instruct them to sort of let you know when a rate gets to a certain level. Another thing you may want to consider when trying to help yourself time the market more effectively is forward contracts. Now, them in themselves, you could do a whole video on it, so I'll just sort of glaze over a couple of the topics that are sort of important to you and how they may or may not help you. So what is a forward contract? Very quickly, it's essentially saying to a currency provider, I want to lock in the rate of exchange now, and I'll pay you in maybe a month's time or 2 months' time. It's normally quite useful for something like a property purchase, where maybe you've got a set budget in mind, you've paid your deposit, you're pretty confident things are going to go ahead, but you don't want the downside risk of any sort of fluctuations against you. So you can approach a currency broker or another company and say, look, I want to lock it in now. I don't have all the money for you straight away, because perhaps you're selling a property to fund your purchase, but what you can say is, in 2 months' time, I'll have had the money from my house sale to fund you guys to pay for my forward contract. So it just gives you that peace of mind, that security that you're going to get that currency rate locked in and you'll have it at the time that you need it. The main downsides are you are locked in essentially, so it can be expensive to sell those contracts back to market. Say if everything falls through or it's vastly delayed, it can be costly to sort of reverse and unwind that contract that you've created with the provider. They've got to sort of sell it back to market, so it's something to bear in mind. And also another thing to bear in mind is you're locking yourself in, so if the market were to keep going higher, you're not going to be able to capture any of that gain, that upside. So you're mitigating your risk, but it also mitigates any potential future reward if you're lucky enough to see the market rise further. So it is a useful tool for some, but just bear in mind what you're doing. Always speak to your currency broker, read the contract terms carefully, and only step in and use that instrument if you're fully confident it's right for you. Another thing you can use to try and time the markets more effectively is limit and stop orders. It's very similar to those market alerts, but it sort of puts a bit more teeth on it really. So a limit order is effectively an order where you set a target price above where the market is right now, and if it does hit that target price, your currency deal will be automatically executed. So your systems with your currency broker will buy the currency for you, and then you've got to basically pay up and settle that trade. Most people will ask for a little bit of money on account as sort of a deposit to sort of set up a limit order, so just bear that in mind. But it's a useful tool for sort of setting up a target price, taking the emotion out of the equation and saying, okay, if the market gets there, I'll be happy, I'll buy the currency and I'll walk away happy. The converse, of course, is a stop loss, which is the opposite of a limit order. It's set below where the prevailing market price is, so that if things turn sour and the market starts falling against you, and you don't want to be sort of caught up in that emotional battle of whether you should stay and hold on or go to market, you sort of set a firm price point where you'll say, okay, I've had enough, I tried, gambled, it didn't work, I'm walking away. That was how much I was prepared to lose. So the first step is to compare your different transfer options. Hopefully the tools in this video will have assisted you with that. But once you've found the provider you want to use, it varies from company to company, but what generally happens is you'll provide things like a passport, a proof of address, and anything document related to the source of funds. Particularly if you're moving a large amount, you'll need to provide some kind of proof of where that money comes from. A good currency broker or currency company will do their best to get that process all done and dusted before your money actually arrives in the account, or is get as much as possible done, because the last thing anybody wants, both on the currency broker side and on the client side, is a last minute compliance hold up. Good news, your account is all set up, you're ready to go, you've gone through all the anti-money laundering process and they've given you the green light. So you've got your safeguarded account details for the euro account your currency broker holds for you. The next step is, of course, to arrange a transfer to that account. Now, if it's something like a property transaction, there's a good chance there's going to be a lawyer involved or a notary involved, or if it's an investment, there's likely going to be a financial advisor involved. So what I would suggest, and it's always up to you, is to provide the details for that safeguarded euro account directly to the professional you're working with. The reason being is if you provide them the bank account that you have locally in that country, if you've been living there, maybe you've got a current account that you use, that bank will normally limit you to about 20,000 euros a day. So it's something that can sort of happen. It's quite frustrating as clients sell a house, they think, great, I can start moving my money. The money hits their account and they're sort of stuck because they can't move it, and it's going to take them a fortnight to get their money back to the UK. So have it transferred from the lawyer directly to the currency broker. What I imagine will then happen is when the money arrives with the broker, you'll get a phone call or an email, and it's at that point you can really start sort of getting into it and looking at strategies for when you want to time the market, see what's going on with the news, if there's anything that you may potentially want to take a bit of a risk on, any events coming out. And then when you're ready, essentially, the next step is, of course, agreeing the exchange. If you're on a platform service, that's going to be you pushing a button and then agreeing to a contract on there. Or if you're using a telephone broker or sort of a hybrid version with a platform and a broker, you can agree that exchange over the phone, entering into a binding verbal contract also. So when the contract is all agreed, you sort of sign on the dotted line, so to speak. That will then start a chain of events whereby that broker will start to sort of settle the trade behind the scenes. They'll get your pounds out of that transaction. It's typically anywhere from sort of instantaneous up to sort of 48 hours, depending on your company. At which point you need to make sure you provide the details of your sterling account that you want paying. It's going to be account name, sort code, and account number. Make sure they've got the details down correctly, because they'll then proceed, once they know you've sort of authenticated the information, with the payment out to your sterling account. If it's below £250,000, they're probably going to send it via the faster payment system, which should be instantaneous. If it's over £250,000, which it often is with sort of property related transactions, you're going to be looking at them using the CHAP system, which most people have sort of heard of, but essentially it's a system sort of for bank transfers that's geared towards larger amounts. The only downside is it's a little bit slower, so if you're not sort of actioning that payment before 3-4 o'clock in the afternoon, it's probably not going to hit your account until the next day. So just bear in mind that it's not always instant, that transfer out to you in pounds. So just wait on it for sort of 24 hours. If that money's not there within 24 hours after they've said they sent it, that's when I would get on the phone to the company or sort of get on their customer service lines and sort of say, look, my money's not here, and then they can look into it. But that really sort of ties it all off. So from start to finish, you've got choose your provider, Make sure you register with them, fulfill all the anti-money laundering and compliance checks, send your money over to the currency company using the most efficient route, often via your legal professional if that's a transaction you're carrying out. Money arrives, talk strategy if that's something you want to do, or just go to market if you just want to get it done. A lot of people do and don't want to get bogged down into trying to sort of see what the market's up to or sort of speculating. Make sure you provide your sterling details, make sure they're correct of course. Stupid thing to say, but you'd be surprised. And then that payment out, make sure it lands in your account within 24 hours. Always query it if it's not there then, and you're done. Okay, next thing I wanted to talk about is sort of the tax and compliance implications. It's really important. I'm not going to say too much on this subject because I'm not, of course, a tax advisor, but all I'd say is this: if you are conducting business internationally across borders, you need to get the proper advice. So speak to your solicitor, speak to your lawyer, whoever you're dealing with when it comes to your transaction, and get the proper advice. And if you're not dealing directly with a lawyer, seek one out. So there's a couple of things you may want to bear in mind that are sort of country specific when it comes to transfers. I'm going to talk about the most popular countries, your sort of France's, your Spain's, your Portugal's, where most British people or European nationals that I've worked with happen to be in when it comes to moving funds back. The first one is France. So in France, one thing to bear in mind is, and most people are doing sort of property related transactions, is when you're working with a notaire and you're supplying them bank details, what they'll generally ask for is a RIB. If you're not familiar with what that is, it's generally sort of a formalized version of your bank details. Just ask your currency company for that. They should be able to provide you one, and that's just one of those hurdles you need to make sure you get over, because it can happen where you get last minute delays because you've sent the details over wrong. The notaire won't necessarily check them until they're about to make payment, and then you get a bit of pushback and delay because you have to wait for the correct information to be supplied. So just bear that in mind. Next country I wanted to talk about is Spain. Now, Spain is a bit more complicated because they, generally speaking, will operate on a system of banker's drafts. If you're not familiar with what they are, they're a bit like a check, other than they can't bounce. It's a binding amount of money that's made out to you, whoever's named on that banker's draft there. So what generally happens is when you go to the notary's office, or if you're appointing your lawyer to do it via power of attorney, they'll go to the notary's office for you, and then generally what will happen is the papers are signed, you give over the keys, and you get given the banker's draft, and then you have the option of taking that draft down to your local branch or whoever you bank with over there, depositing that draft into your account a bit like a check, and then you wait for that to clear, and then of course you can then either convert it with the bank or send those sort of cleared funds over to a currency broker. One thing to bear in mind is the Spanish banks generally will charge you quite a fee to do that. It depends on the bank and whether you can kind of sweet talk the person behind the desk there about sort of giving you a bit of a discount, but it can be sort of about 1%, sometimes less, sometimes more. So it's really important to sort of take that costing into account, because if you aren't, you can get stung with some nasty fees. So what I would suggest to do, always speak to your lawyer about this of course, is ask your legal advisor, your lawyer, your solicitor, to bank that draft into their client's account on your behalf. Most lawyers will have an account which is sort of a safeguarded special client holding account, and they should have the facility to do that for free. In my experience, I've never heard of a lawyer being charged to do that. And then what you can then do is, once that draft is banked to the lawyer, they can then send those cleared funds over to the currency broker of your choice. What I would suggest is there are a few currency companies out there that can handle a banker's draft for you. I would stay clear of that, and the reason being is, although that company will be able to save you the supposed sort of initial outlay of that fee, what it then does is sort of tie you into using that company. There's really not a lot of ways you can get out of that, and unfortunately there are some companies that will sort of take advantage of that and just sort of eke up their fees a little bit more. So the kind of saving you're supposed to get with banking the draft with them is quite often sort of outweighed with the fact that you're going to get a worse exchange rate. So what I do is get your lawyer to bank it. That way you've got the flexibility of sending it to whichever provider you want, and then you can get the sort of best rate you're after. So please don't bank your draft with a currency company unless you've got some kind of arrangement in writing guaranteeing you a spread from market. Third and finally, I just want to sort of speak to the third most popular country that I've dealt with is Portugal. Generally pretty simple over there. Sometimes you will get sort of a banker's draft arrangement. Just sort of follow those similar steps, get the lawyer to bank it for you. I would suggest for them then to transfer it on to the currency company of your choosing. But generally speaking, the funds will come in via a bank transfer to a currency broker's client's account, so it's relatively straightforward. So I just wanted to wrap up this video. I hope you found it useful. A couple of things I just really wanted to hit home is make sure you're getting a transparent fee structure and make sure you're getting the service you need depending on the size of transaction you're doing. Small amounts, nothing wrong with an application. Larger amounts, apps will probably still be okay, but if you want that sort of next level of service, if you want somebody that's knowledgeable about the markets and really understands the banking system and the dynamics of liaising with lawyers and investment advisors in different countries, bring that all together so that their client's transaction works really well, I would suggest using a currency broker, particularly if you can nail down a very competitive fee structure. I hope you found this video useful. My name is Alec Young. I'm the founder of a company called TADfi. We're a high volume specialising currency broker based in the UK. If you are considering doing a transaction or maybe planning ahead and wanting to get a bit more information, feel free to drop us an inquiry. Link is in the description below. We offer full transparent fee structure breakdowns and we're either matched or better than some of the leading low cost provider online applications and platforms. So unlike a lot of currency brokers out there, we're going to tell you exactly how much we're going to charge you for our service. And what we do, which sort of ties it all together as well, is we have a very intuitive online platform that you can use, so you're getting that convenience of an app-based service, but we also have expert telephone dealers. So if you are looking for that service when moving a large amount, you can speak to me or one of my colleagues and you're going to get that attentive service you want when you're moving a large amount of money. So feel free to inquire. You get your transparent fee breakdown and an explainer as to how it all works and build the best of both worlds when it comes to currency transfers.